Tesla stock is down about 3.5% today, following some pretty bad news. We also have some important things to go over in terms of our broader markets. So let's get started with your big bad news for Tesla stock today, and the reason why Tesla is down 3.5%. Tesla has just cut prices for the Model Y in Germany, France, and a few other countries in Europe. The Model Y standard range is down 4.2% overnight in Germany. The Model Y long range is down 9.1%, and the Model Y performance is down 8.2%. This is a reduction of 1,900 euros for the standard range and 5,000 euros a piece for the long range and the performance. Just for context, euros are worth more than dollars, so 5,000 euros worth of price cuts is equivalent to $5,436. In France, the Model Y standard range got reduced by 6.5%. The long-range Model Y was reduced by 5.7%, and the Model Y performance was reduced by 6.7%. The standard range seen a price production of 3,000 euros, same for the long range of 3,000 euros, and the Model Y performance had a drop of 4,000 euros. So these reductions in Europe overnight, they're not small. They're very large price drops, and they most certainly will affect Tesla's margins. But I think most importantly, not just Tesla cutting prices in Europe, Tesla now, since the start of 2024, has cut prices in China and Europe. The US is probably coming next. So there's this fear out there that is going to get worse, that is getting worse today, that prices will just continuously get cut. So why go long on Tesla now if next week or tomorrow even, Tesla lowers prices again, this time potentially in the US. And Wall Street is looking at this like the worst could still be to come. Because in terms of importance in markets, the US is number one, the most important market. China is number two, and Europe is number three. Now, over the long term, China might become a more important market. But as of right now, the US is the most important market. China is number two, and Europe is number three. Gary Black writes on X that he estimates Europe Model Y deliveries alone accounts for 11% of Tesla's volume in Q4, about 54,000 units. Gary Black believes the net drag to these price cuts alone is going to be about 15 cents a share for full year 2024 EPS. He has lowered his estimate to $3.75 from $3.90. Gary Black also believes this price reduction in Europe is not going to lead to more people buying Teslas because other competitors in Europe are probably going to have to lower their prices anyways, and a lot of competitors in Europe already sell vehicles that are somewhat cheaper than Tesla. So this latest round of price cuts so far in 2024, that's going to be a question coming January 24th on the earnings call. We need a clear, concise answer to when prices could stop falling and when margins will bottom, because this is going to hurt Tesla margins. In other pretty exciting news, in Germany, Tesla is now offering 0% financing for all new Model Y orders and inventory. That makes you wonder if somehow Tesla lowering prices is being offset by this new 0% APY. So I'm definitely pretty curious on that, because I think Tesla would sell a lot more vehicles if they did offer 0% financing, like some competitors do here in the US. That's something to watch very closely January 24th. 0% financing could be a big deal. Tesla is now charging money again for most Model S and X colors in North America. In the US, Stealth Gray is $0 additional dollars, whereas Ultra Red can run you as high as $2,500. In Canada, same is true. $0 additional dollars for Stealth Gray, that now comes standard, but Ultra Red can run you as high as $3,300. In September of 2023, Tesla made all Model S and X colors a no added cost option. Ram has launched its first ever EV in the US, a van with 162 miles of range, and it starts at $78,000 before incentives. This is a cargo van, something like an Amazon or UPS would drive. And I don't have to be an expert in package delivery to tell you 162 miles is not going to cut it in any use case for a van like this. Lucid stock has now hit an all-time low of $2.85 a share. The stock is down 95% from all-time highs in November of 2021. And if you think Tesla has it bad with Tesla's 14% decline year to date so far since the start of 2024, on pace to be one of the worst starts for Tesla ever, Lucid stock is down 40% since Christmas. Audi's first ever all-electric wagon, the A6 e-tron, is spotted in new spy shots. It's expected to be officially unveiled soon and contain the same 100 kilowatt-hour battery as Audi's other EVs. I mean, what a strange vehicle though. It looks like a sporty kind of car in the front, and then total mom van, soccer van vibes in the back. Little on the strange side. Uber is now stepping up efforts to get drivers into Teslas, offering a $2,000 rebate for Uber drivers to purchase a Tesla. I actually pointed this out in one of the last videos. This is pretty interesting if Uber is trying to cozy up to Tesla, if you will, and Tesla is really the only provider that will make robo-taxis a reality. Some kind of partnership down the line with Uber and Tesla wouldn't surprise me. In a new email from Tesla, the email says Tesla vehicles are designed to get better over time. Over-the-air software updates make the latest infotainment and safety features available to your vehicle. Tesla battery supplier CATL is sorting out production line resources and pushing for cost reductions to bring down prices. This article is actually headlined Battery Price War. CATL, BYD pushing battery costs down further. Since Tesla wants to keep cutting prices, it is imperative that Tesla gets battery costs down as well. We are being warned that Model 3 deliveries are going to take a little bit longer than expected because they're not going to be happening for a while due to Australia's technical compliance issue. We don't know exactly what this means, but from January 17, 2024 until further notice, there will be no more Model 3 deliveries in Australia. Volvo sees, quote, tremendous growth in the battery electric vehicles category, says their CEO, Jim Rowan. We have much more pricing power, and people have got more disposable income, so they can afford it if they want to drive an EV, said Volvo's CEO. BMW's CFO, Chief Financial Officer, said the tipping point for combustion engines was last year. Future volume growth will primarily come from battery electric vehicles. The current sales plateau of combustion cars will continue and then fall off slightly, he added. According to the managing director of S3 Partners Analytics and data provider, Tesla is no longer the most shorted stock on the market. Number one place is now Apple with 0.65% short interest of free float and $18.62 billion worth of short positions. Microsoft comes in number two with the exact same short interest of free float at 0.65%, and Microsoft is $18.61 billion sold short. Tesla is now number three with 3.06% short interest and 18.51 billion worth of short positions. And no, for anyone wondering, this does not mean Tesla shorts covered on their short positions. Tesla shorts have been adding to their short positions aggressively so far in 2024, but the value of Tesla stock has fallen, so the dollar amount that is sold short has also fallen quite a bit. If Tesla can just get one green day from here, Tesla's going to be back in the number one spot. Not that this is a competition or some kind of weird flex, but that's just the reality of the situation. Tesla will always be, for the foreseeable future at least, a heavily shorted stock. So it's going to be a very volatile stock to the upside and to the downside. If shorts cover, as I expect they will in the second half of 2024, that's going to lead to substantially larger upside than we would have otherwise seen. Same is true to the downside. Maybe a Ford or GM, if they cut prices, they wouldn't be down 3%, 2%, basically every day in the red. So it definitely works to both sides here. Deliveries for the US in the month of December are estimated around 86,000. The percentage of stocks above their 50-day moving average continues to plummet, absolutely getting wrecked today, down 11.36%. You are now back to May, almost April levels of 2023. As far as how many stocks are above their 50-day moving average. Considering the SPY ETF is still trading near all-time highs, the markets are getting weaker and weaker by the day under the surface. The average stock is not doing so well right now, whereas your Magnificent 7 stocks not feeling quite the pain. That's why the next couple of weeks are going to be a real test for the markets as we get Fed Jerome Powell on January 31st, and that same week, Powell will be on a Wednesday, January 31st, you're going to get Microsoft, Google, Amazon, Apple. If those earnings come in bad, stocks can have substantial downside from here. And that's not exactly going to help out Tesla in the short term. But rest assured, I still keep my $450 price target on Tesla stock for full year 2024. That's because I believe EPS will come in around $4.50 and the multiple will expand from where it is today, around 65 times to 100 times as rates go lower and we avoid a recession and the Fed turns on the money printer and starts accommodating the markets again. So any meaningful pullback in Tesla stock continues to be a buy the dip opportunity in my personal opinion. As you can see, the SPY is down about 1% today. The NASDAQ is down 1.17%, the Russell 2000 down about 1.3%, even the VIX up about 10% today. Part of this is because overnight last night, futures started to take a big hit because at 2 o'clock in the morning, some of you guys were sleeping. If you're like me, you probably weren't. You're a night owl. You just can't go to sleep. The inflation rate out of the UK came in quite a bit hotter than expected. So year over year inflation from the UK came in at 4%. Expectation was 3.8%. Core inflation year over year came in at 5.1%. Estimate was 4.9%. Month over month headline came in at 0.4. Estimate was 0.2. And core month over month came in at 0.6%. Estimate was 0.4%. Last month, you were actually negative month over month on your headline and on your core. So whether this is due to shipping costs due to the Red Sea situation or other things, the point is inflation starting to ramp back up again over in parts of Europe. That's not exactly a good sign for what could happen to the US. We did have some good news. Overall, net positive news. Retail sales month over month for the month of December came in better than expected at 0.6%. The estimate was 0.4%, and last month you were at 0.3%. Now, why I say this is positive is because you want to see the economy holding up. As I've said before, and I'll likely say it again 100 different times here on this channel, the economy is 70 to 73% retail sales, people spending money. So if retail sales were to slow down, your odds of a recession dramatically increase. But as you know, it's 2024 and the markets were pricing in 7 rate cuts. Following this data today, the markets are now pricing in 6 rate cuts. Let's count them together. 1, 2, 3, 4, 5, 6. This would be the Fed funds rate at 3.75 to 4% by the end of 2024. So you're pricing out some of these rate cuts from our markets. Question is, do we continue to price in less rate cuts for 2024? To a certain degree, markets pricing in 7 or even 6 rate cuts is suggesting the economy is probably going to slow down from here. But at the same time, the markets have been trading on this assumption that we're going to see 6, 7, potentially more rate cuts than that. But I will tell you, popular to contrary belief, you won't understand this if you look at what's happening to the markets today. This is actually a good thing because Fed Jerome Powell speaks on January 31st. He gives us the next kind of outline of what to expect for Fed policy, what the Fed officials are thinking about, and they express concerns. And you've been around the block a couple of times, right? You understand an FOMC meeting and press conference. Well, if we were pricing in 7 rate cuts heading into January 31st, we're going to get a much more hawkish Powell than if we're only pricing in 5 or 6 rate cuts. So what we are seeing today does help reduce some of the potential shock that we will get on January 31st when Powell says, yeah, no, we might only cut rates twice now, because the economy is holding up and inflation picked up a little bit last month. Still, overall, I'm not that bullish on January 31st, but the more we outprice rate cuts or unprice rate cuts, maybe I should say, the more bullish potentially it'll be after the Fed, after January 31st, or maybe the less of a crash we could see. Also, due to retail sales data, your 10-year treasury yields are up about 4.5 basis points today. 2-year treasury yields, on the other hand, well, yeah, they're up 13 basis points today. So in the short term, yields are starting to rise again. In a little more good news, based on this beat with retail sales that we got today, the markets are now pricing higher GDP for Q4. GDP estimates for Q4 now expected at 2.4%. Yesterday, it was at 2.2%. Now, this Atlanta Fed GDP Now tracker has an off ratio or a miss ratio by about 0.7%. So pricing in 2.4% implies that we could see somewhere around 1.5 to 1.7% GDP for Q4, or potentially as high as 3.3% GDP. Either way, it looks like the economy is still not heading into a recession. But we do want to hear what Discover says on their earnings call and their earnings report coming today in after hours, because if they say the consumer maybe not doing so well, they're starting to default more, well, that could be very bad news for stocks as well. Discover could have a broader impact on our markets than maybe what they typically would. I do have some trades on Discover for Discover's earnings. If you guys want to come join the trading community, check out that link down below in the description of this video. The latest AI investor sentiment survey remains unchanged, but I'm expecting to get an update here after midnight tonight. Tesla's global inventory numbers for the Model Y, as you can see in this ugly yellow, taking a little bit of a down move. Model X inventory going up just a little bit, sitting at about 2,000. Model S inventory very low, less than 1,000. And Model 3 inventory is, still at 12-month lows. You're not seeing a spike here at all. Model 3 inventory in total sitting at about 745 units. Google Trends data for the Tesla lineup shows a continued deceleration in the Cybertruck and now the Model 3, but an uptick in the Model Y from 31 to 34. Tesla does continue to run about 400 different ads via Google. Oil is up over 0.5% today. The dollar up slightly, but as you can see, the dollar has been rising ever since the start of 2024. When the dollar goes up, stocks go down. If the dollar does start to go down, stocks will go up again. That's just how it works. I've explained this a bunch of times here on the channel, but essentially if you take in foreign currencies, Chinese currencies, European currencies, South American currencies, convert those into a strong dollar meaning, this chart rising, you're going to get less dollars, less earnings to report to shareholders. If the dollar falls, foreign currencies convert back to more dollars, higher earnings to report to your investors. Gold is also down about 1%, which looks good to me. Tesla stock on the RSI is officially oversold with an RSI of 29.90. The MACD line, as I expected, started to really curl downwards today. In the next video, we will be going over everything you need to know about Tesla, technically speaking, on the charts, what's going to be coming next for our markets. Jamie Dimon, JP Morgan's longtime CEO, as well as David Solomon, Goldman Sachs CEO, had some pretty ominous things to say about the economy. Tom Lee still expects 50 to 60% returns for small cap interest rate sensitive names, which implies Tesla is part of that group as well. All of that and much more we will discuss in the video coming out at 8 p.m. tonight, so stay tuned to the channel for that one. But that's gonna do it for this video. Hit the like button as well as subscribe to the channel if you made it to the end of this video. Thank you for watching. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.